what about financials? I think by and large we've been staying away from that, but given the kind of underperformance, does the risk reward seem favorable now?
So financials is a very, very broad sector. I mean, it includes insurance company, life insurance, general insurance, lending, non-lending. In the lending, it includes private sector banks, NBFCs. Within NBFCs, there are asset lenders, gold lenders, affordable housing finance companies. So there are various segments, and the drivers of each segments are not necessarily the same. However, I guess from your point of view, the question you are asking is more towards the large private sector banks, because they are the biggest component in the indices. I do believe the best in terms of the asset quality, the best in terms of the credit deposit ratio, the deposit growth is probably behind us. Deposit growth will remain in a 12% kind of a range. So that by default means that the credit growth cannot exceed more than 15 odd percent. So this challenge will remain for the coming period. But the NIMs that were compressing because of the cost of deposit, I think that should start easing with the hopefully the interest rates also coming down and the liquidity being improved through the CRR cut. So I would say one has to reset the expectations in terms of what is the kind of growth one should expect and what is the kind of return ratios one should expect. This sector is not going to be a 20% grower and a 20% ROE, which the investors have been used to for the past 15-20 years. Now it will probably be a 12 to 15% grower with a 12 to 15% kind of ROE. And if one adjusts to that fact, then I think from that perspective, the valuations are now becoming really, really attractive. And one should be long on this place with a 5 years perspective.
Many more interactions in the year to come. Thanks as always for taking the time out.
Thank you so much.